All right, so next up, again, we have the Chief Market Strategist of Schaeffer's Investment Research. His name is Tony Venosa. I'm excited to bring him over. Welcome. Oh, that was my fault. Welcome, Tony. How are you?
Good. How you doing?
Good. I'm trying to get a lot of information out in a short amount of time, man. But I'm excited to open up the next 20 minutes to you, teach us about investing, teach us about investment research, and ideally we can all become better investors because of it.
Thank you. Okay, let's get started here. Good afternoon. Today I would like to briefly discuss with you on adding an edge to your options trading in the cannabis sector, while at the same time introduce to you some of the more liquid cannabis stocks that we follow and trade. My name is Tony Venosa, and I'm a senior market strategist with Schaeffer's Investment Research from Cincinnati, Ohio. I've been with Schaeffer's for nearly 12 years. Schaeffer's Investment Research has been providing recommendation services and stock option education since its beginning in 1981 by founder and CEO Bernie Schaeffer. Headquartered in Cincinnati, Ohio, Schaeffer's Investment Research has become a leading and trusted source of research and analysis for individual investors in major financial media outlets. What I want to impress upon you today is the importance of having an edge, which is having a slight advantage over other market players. At Schaeffer's, whenever we submit a trade to our subscribers, we must answer the question, why now? Why should this stock move in the direction you're entering, and why should it move now? It sounds simple enough, but it's extremely important to ask yourself this question whenever you enter a trade. And more importantly, you must be able to answer the question. Another related question that needs an answer is, what are one or two things that you know that others may not? It doesn't have to be complex, just something that most market players are not observing or taking notice in a particular stock. An example of an observation that I guarantee most people will know about is a head and shoulders topping pattern. We're trying to avoid spots where other people will be inclined to enter or exit. We want to identify entry points where the crowd is unlikely to join us. Today, I'm going to show you some of the ways we answer these questions when we issue trades. And by the end of my talk, you will benefit by learning some of the edges we use to find winning trades. The single most important takeaway I want you to remember is you must have an edge to consistently profit in the options market. Not only because it'll lead to profitability, but it'll also build the confidence you'll need to succeed. And you'll need confidence so in your higher conviction trades, you can increase your position size. So I want you to ask yourself in every trade you execute, do I have an edge in this trade? At Schaeffer's, what sets us apart from the crowd is our methodology, which is a three-tiered approach to analyzing the markets, which Bernie Schaeffer aptly named expectational analysis, which we believe gives us a leg up on the competition. We use a combination of fundamental analysis, technical analysis, and investor sentiment to uncover trading opportunities the rest of the crowd is missing. So let's first discuss some of the simple ways we use fundamentals. A company can choose to return capital to its shareholders in one of two ways. The first one is through issuing dividends, where a percentage of a company's earnings are returned to their shareholders. And the second is through stock buybacks, where a company repurchases their shares in the marketplace, thus reducing the number of outstanding shares available and will effectively increase the company's earnings per share. During the past 15 years, stock buybacks have become standard operating procedure for many companies. There's two ways a company can do a buyback. The first is through a direct repurchase from shareholders, and the more common way is buying back shares on the open market. Stock prices tend to rise on these announcements, which may mean companies will pay more to execute the buyback. The key to analyzing buybacks is the percentage of shares outstanding that are being repurchased rather than the absolute dollar amount. A stock buyback of 6 to 8% of all outstanding shares can make us take notice. A stock buyback of 10% or more can be perceived as a strong buy. Obviously, this is just one key aspect and should not be viewed as the sole reason for jumping into a stock. The fundamental applications of a stock buyback are merely one thing to consider when picking stocks. Due to the infancy of the cannabis sector, there's not been much action in the way of stock buybacks, but I do have 3 examples to show you. This is a chart of Scott's Miracle-Gro Company, ticker SMG, which offers hydroponic products to help users grow plants. They announced a stock buyback on February 2nd, 2020 of $750 million, which at that time represented 12.5% of the outstanding shares. Since then, shares have risen 85%. This is a chart of tobacco giant Altria, ticker MO, which has a 45% equity stake in Kronos Group, ticker CRON. They announced a buyback on January 28th of this year of $2 billion. Since that announcement, shares have risen over 22%. Lastly, alcohol producer Constellation Brands, ticker STZ, which took a $4 billion equity investment in Canopy Growth, ticker CGC, the largest pot stock in the world. They announced a $2 billion buyback of January 7th of this year. Shares are up 9% since this announcement. Another tool to our fundamental analysis is observing insider transactions, which I think is underrated and not widely followed. Insider transactions are legal transactions conducted by corporate insiders, such as directors and CEOs who buy and sell stock in their own companies. They must report their trades to the SEC within 2 business days. Knowledge of a company insider buying or selling a large number of shares would be valuable to an investor. SEC rules prevent insiders from trading company stock within any 6-month period. So if an insider is buying their company's stock, an investor can reasonably assume the company's fundamentals are in decent shape. Nehat Sehun, a renowned professor and researcher in the field of insider trading at the University of Michigan, found out that when executives bought shares in their own companies, the stock tended to outperform the total market by 8.9% over the next 12 months. Conversely, when they sold shares, the stock underperformed the market by 5.4%. This is a graph courtesy of MarketBeat.com, which shows the past 3 to 4 years of insider buying and selling of Amyris, ticker AMRS. Amyris's connection to the cannabis sector is through the research and production of biosynthetic cannabinoids, including CBG, which is referred to as the mother of all cannabinoids. Here's Amyris's stock chart going back to 2019. The green circles roughly depict all insider purchases during that quarter. The second quarter of 2019 saw $38 million of purchases, with one director making a $4.3 million purchase. In the first half of 2020, this same director made an additional purchase of $11 million. This same director took enormous profits on April 13th of this year by selling 4.6 million shares at $14.96, equating to around $70 million. Now, I'm not recommending, just one second here. Now, I'm not recommending to anyone trading in the cannabis sector to buy a stock based solely on an insider purchase. I would consider insider purchases and sales to be one tool that many market participants are not using in their own analysis. I combine my analysis with other factors to find an optimal place for entries and exits. This is a daily chart of 22nd Century Group, ticker XXII, which is a biotechnology company with prior experience working in the tobacco industry. They work on developing new hemp and cannabis plants with optimized and unique cannabinoid profiles. On the chart, I highlighted 2 dates this year in green. On March 16th, a director for 22nd Century Group purchased 52,400 shares at $2.86. And 2 weeks later, the CEO purchased 15,000 shares at $3.23. On April 26, a month later, shares made a new 52-week high at $6.07, nearly doubling their investments. So let's quickly move on to technical analysis. I'm going to show you a couple of the technical factors I like to follow. One of the most basic concepts of technical analysis is support and resistance, but I think can be the most powerful. It really is a simple concept, and keeping it simple is a plus in trading the markets. So key points below the current price are known as support, where buyers could be expected. And those above the current price are resistance, where sellers could be expected. The levels I'm about to show you will help for potential entries and exits with the objective of avoiding crowded trades and answering the question, why now? The optimal trades to make are the ones where multiple levels come together, thus strengthening the case for support or resistance. We believe paying attention to a company's market capitalization level can reveal important levels not found on a typical price chart. It amazes us how market cap round levels such as the 1 billion, 5 billion, 10 billion, etc. can often act as magnets while also serving as support and resistance levels. Here's a chart of Curaleaf Holdings, ticker CURLF, based in Wakefield, Massachusetts, which engages in the production and sale of cannabis through retail and wholesale channels. The chart plots the market capitalization levels for Curaleaf going back to June of 2019. As we can see in the chart, the round number $5 billion market cap level acted as resistance in 2019. Finally, in August of 2020, shares broke this level. They faded back for a retest and then proceeded to rally to the $10 billion market cap level in January of this year. Shares continue to consolidate around this $10 billion market cap level. This is a chart of Canadian company Aurora Cannabis, ticker ACB, which produces and distributes medical cannabis products worldwide. On the chart, Aurora Cannabis first reached the $10 billion market cap milestone in October of 2018 before following all the way back to the $5 billion market cap level. A subsequent rally back to the $10 billion market cap level in 2019 formed a double top pattern. Shares fell all the way back to the $1 billion market cap level where it's been basing since. Here's a chart of Innovative Industrial Properties, ticker IIPR, the only publicly traded cannabis-focused real estate investment trust. In June of 2019, shares broke through the $1 billion market cap level for the first time in its young history. Shares chopped around this level for the next 10 months until a strong rally in the latter half of 2020 lifted shares all the way to the $5 billion market cap level in February of this year. From there, shares peaked and have been correcting below this $5 billion market cap level. Round number levels are another simple way to analyze price charts. Round number levels such as 10, 20, 50, and 100 can also act as magnets for stocks. This is a chart of the Cannabis ETF Alternative Harvest, ticker MJ, which is one of the more liquid names in the space. If you need immediate exposure to the cannabis sector, this ETF is your best bet. Looking at the daily chart, we can observe shares trudging along in 2020, finding support on each test of the round number $10 level. The next round number, the $20 level, acted as a magnet for shares where they doubled from November 2020 to January of this year. Shares relaxed for a couple weeks before an unsustainable rally just above the $30 level produced a blow-off top. The $20 level has been a sticky level since. If you are considering a purchase in the cannabis sector, the basing action above the $20 level is looking promising. Here's a 2-year chart of Canadian company Canopy Growth, ticker CGC, which is also listed on the NASDAQ. The $20 level acted as resistance on 3 occasions on the chart in 2020. Finally, in November, shares broke this level and quickly rallied up just shy of the $30 level in early December. Shares formed a bull flag for the remaining part of the month before a sizable rally through the $30 level and up through the $50 level where it had its blow-off top. I want to emphasize the importance of looking at levels on a chart, and you'll start to notice how stocks react and act around these psychologically significant numbers. Simplicity can sometimes be a beautiful thing. Your analysis in specific stocks may not always uncover elegant examples as I've showed, but putting in the effort to discover stocks that do respect certain numbers will be rewarded. Let's move on to the final piece of expectational analysis, sentiment. One of the sentiment indicators we heavily use is the buy to open put call ratio, which we feel can reflect the degrees of optimism or pessimism in a stock or index. We calculate the put call ratio by simply taking the number of bought to open puts traded on the day and divide that by the number of bought to open calls traded that day also. We can calculate these ratios on individual stocks, indices, or the overall market. The theory is that near market lows, the put call ratio will be high, usually greater than 1, reflecting more puts being traded relative to call options, thus reflecting pessimism on the stock. When this ratio is near or at an extreme, it can mark a bottom. Conversely, an extreme low in the put call ratio can reflect strong optimism in a name, which could signal a potential top. Thus, the put call ratio is a contrary indicator when it reaches extreme highs or lows. This is a chart of Jazz Pharmaceuticals, ticker JAZZ, which acquired GW Pharma in early 2021, which is the first company to have the only FDA-approved drug that is derived from cannabis substances. The chart shows instances where the 10-day buy-to-open put call ratio spiked, indicating put purchases were rising relative to call purchases, which is a sign of pessimism. The rolling over action in the ratio provided the clue on when to enter on the long side. Short interest is one of my favorite go-to indicators for sentiment. It measures the level of investor pessimism by the amount of shares sold short on a particular stock. Short sales are reported by brokerage firms twice a month, usually on the 1st and 15th with a 1-week delay. Every stock has a reported short interest, which is released to the public. There are 2 primary ways we use to measure the level of short interest. The first is the short interest ratio, which is the total number of shares sold short divided by a stock's average daily volume. The ratio represents a rough estimate on how many days it would take investors to buy back all their shorted shares at the stock's average daily volume. A reading of 5 is viewed as heavy pessimistic sentiment. The other way we measure short interest is a percentage of a stock's total float, which is the total number of shares of a company available for trading. A reading of 10% is viewed as heavy pessimism. By checking for changes in a stock's short interest, we are able to gauge the public's level of pessimism toward a stock. Generally speaking, a high short interest number indicates investors have a negative outlook on the company and expect the shares to decline, which allows them to profit.
2 minutes left here, Tony, just to let you know.
Okay, thank you. From a contrarian viewpoint, we see this pessimism as bullish if the stock is in an uptrend. Because a short seller has unlimited risk, the pressure to cover will build as shares continue to march higher. There is a flip side of this analysis. Elevated short interest can be viewed as bearish in the context of a downtrending stock. We consider the bears to be in control of the stock, and continued downward momentum gives the shorts little reason to exit their winning trades. Short interest in Kronos Group, ticker CRON, which can be seen in the bottom pane of the chart, began to rise in April of 2019, which coincided with a peak in shares. Bears took control by increasing their position from 19 million shares short to just over 64 million shares in March of last year, sending shares down 76% from its peak. A substantial short covering period is currently taking place, which began to accelerate last fall, sending shares from $5 to over $10 in February. Okay, that's all I have for you today. I'd like to thank everybody, including Benzinga, for giving me the opportunity to briefly discuss and introduce you some of the ways we analyze companies in the cannabis sector at Schaeffer's Investment Research. If you have any questions, please send them over, and I'll try to reply as soon as possible.
Tony, thank you so much, man. Really appreciate you being here. You always drop a knowledge bomb on us, so thank you for going into some cannabis stocks. I think super valuable for all of us.
Thanks
again.